Looking at the daily chart, we can see the broader market structure. We had a significant liquidity sweep below this previous low around the 98K mark, followed by a strong move up. This created a new high around 124K, but notice what happened. We saw a break of structure, or boss, to the upside, which typically signals a continuation of the bullish trend. However, after that boss, we've pulled back into a key area of interest to fair value gap, or FVG. This FVG is a zone where price moved quickly, leaving behind an imbalance. We're currently finding support within this zone, which could be a sign of a potential reversal or at least a temporary bounce. The key here is whether we can hold above the 112K level, which is the bottom of this FVG. A break below that would change our daily bias from bullish to bearish now. Let's zoom into the 4-hour chart to get a more refined view of the recent price action. The 4-hour chart confirms a shift in our market structure. We had a clear uptrend, marked by a series of higher highs and higher lows. The liquidity trend line shows us where retail stops were building up, which were eventually swept. The critical event here is the change of character, or chalk, that occurred around the 118K area. A chalk is the first sign that the market structure is changing from an uptrend to a downtrend. We then had a series of boss to the downside, confirming this bearish shift. We've now pulled back and are retesting a previous high that was also a liquidity zone. The 4-hour is clearly showing a bearish market structure, with the most recent boss confirming a move to the downside. This suggests that the daily pullback into the FVG is more than just a pause, it's part of a larger, short-term bearish trend. Let's go one step further and look at the 1-hour chart to identify potential entries. The 1-hour time frame gives us even more detail on the current downtrend. We can see the same bearish shift we identified on the 4-hour chart. Notice the key order block and FVG zones that were formed. The market respects these zones. We've seen multiple boss events to the downside, reinforcing the bearish bias. The most recent price action shows that we've pushed down and are now consolidating. We have a clear FVG formed from this latest move down. A possible scenario is for the price to retrace into this FVG, which aligns with the overall bearish sentiment from the 4-hour chart. This would be a high probability area to look for a short entry. The target would be the most recent low, and even lower to find some liquidity now. Let's do a deep dive and review the trade I shared yesterday, which was executed on the 15-minute chart. This is where we apply the information from our higher time frames first. Recall our higher time frame bias. We are bearish on the 4-hour and 1-hour charts. This short trade setup on the 15-minute aligns perfectly with that higher time frame direction. The initial setup was based on a change of character chalk to the downside, indicating a shift from a short-term bullish move to a bearish one. We then saw a break of structure boss that confirmed this new downtrend. The entry was at the order block and FVG that formed after the boss. This is a classic smart money concept entry. We're trading from an institutional point of interest. The entry price was around 115,350. Our stop loss was placed just above the high of the FVG, giving the trade enough room to breathe at a risk of about 0.33%. Our target was the swing low that caused the break of structure, which gave us a fantastic risk-to-reward ratio of 5.07. As you can see, the trade played out perfectly, hitting the target for a profit of over 1.6%. This trade exemplifies the power of multi-time frame analysis. We had a bearish bias from the macro charts, and we used the micro chart to pinpoint a precise, high-probability entry with a clear risk-to-reward ratio. So, what's the plan for today? We've established a clear bearish bias on the medium and short time frames. We are currently in a corrective move on the 15-minute, and we should be looking for a new short opportunity. The plan is to wait for the price to retrace into a key supply zone. On the chart, I've marked a new order block and FVG. This is our current point of interest. We will be looking for a short entry around the 115,200 level. Our stop loss will be placed just above this structure, and our target will be the previous low around 113,200. This provides us with another favorable risk-to-reward setup. Always remember, wait for the market to come to you. Don't chase trades. Stick to your plan, use your multi-time frame analysis, and manage your risk. This is the key to consistent profitability in the markets. Thank you for joining me, and I'll see you in the next session. Happy trading!